Hello and welcome to Crypto Weeklies. In this video, we look at Bitcoin and ETH, which together hold about somewhere between 60 to 70% market share of the entire asset class. Bitcoin is about 59.2% market share of the crypto asset class, whereas ETH is at around 12%. If you add them together, it's about 71% share of this or the dominance of these two blue chip assets, the number one and number two crypto. So it makes sense to look at their own risk based journey using our own website over here, cryptoweeklies.com. Under the SMA risk, this is the 20-week simple moving average risk, color coded and banded between 0 and 1, where high risk is in red color, moderate highest risk is in red color, moderate to high risk is in orange color, yellow color is moderate risk, and anything below that is low risk. So anything below 0.4 on when Bitcoin and ETH both are below that is typically when the asset class has cooled off, like it did back in March 2025, also in September 2024, July 2022, where that was the bear market bottom, and also in the middle of the 2021 rally in the summer of 2021. Right now, the Bitcoin risk and ETH risk are both below 0.4, but ETH risk is again had its bounce off that 0.2 risk level, and then again formed a uh, lower high over here, and then now the risk level has come back down. Now ETH risk is again at around 0.18, Bitcoin risk is at around 0.10. Whenever Bitcoin risk is below 0.2 and ETH risk is below 0.2, that's when most of the good deals in the asset class are evident. Again, you can check that out with the Bitcoin chart and ETH chart over here, overlapped over the risk levels. So for instance, as we mentioned, when this is again the red line over here is the 20-week simple moving average. In 2022, when the price in the first drop of 2022, in that June drop, the price was so far away from the 20-week simple moving average that Bitcoin risk had capitulated at that point. Similarly, in 2025 March time period, Bitcoin risk was low because price had moved a lot away from the 20-week simple moving average. Similarly, in the November December 2025 drop as well. So, and one more instance is the August 2024 lows, where Bitcoin was consolidating on that lower high structure for quite a while from the March 2024 euphoria till about October November 2024 election related chop. So that's again one instance where this model, if you were to tune out the noise of the price action and follow along using this risk-based dynamic DCA strategy. Again, if we focus on Bitcoin only right now, whenever DCA at the levels when the SMA risk has gone down quite a bit, again we do have another representation of price color coded with this exact risk level on Crypto Weeklies. It's the SMA risk for Bitcoin. This is the same chart, but the price is superimposed with the SMA risk. So whenever on this chart, if we look at, let's say, a cutoff level for DCA, whenever the risk is less than 0.2 or that is less than 20%, as mentioned previously, again there are instances where it's a local minima but not the macro bottom, but still after when and if the price goes below the 0.2 risk level, there is at least one counter trend rally to a lower high or a higher high before the bear market kind of sets in. Again, this model had predicted the June 2022 drop and the corresponding risk lowering and DC opportunity emanating at that point. Similarly, in August 2024 and in April 2025, and now the third time in December 2025, this model has suggested that again, if we are somewhere over here, if there is one more counter trend rally or over here in early 2022, when the price did go to the lowest risk level again in the midst of the bear market, the price went to this cooled off risk level, and again there was a lower high in March of 2022 before the bear market came in full force. So that could be something that could happen in the first half of 2026 as well. Again, these charts are all available for free, no signups or logins required. So if you like this kind of content, please give a like and subscribe. Similar charts for ETH. Again, ETH is again the number two crypto, has been number two crypto for a while. Its own price superimposed with the risk level suggests a similar trajectory for ETH whenever again the risk level has cooled off, let's say lower than zero point 0.2 risk on DCA at those level eventually panned out. Even in the initial drop of the bear market, there was one more counter trend rally in April 2022, and again in that June era of 2022 where ETH had its major bottom, and then that was the market cycle low for ETH. This SMA based perspective with price superimposed on it helped identify that accumulation zone. In future, if let's say price were to recover to, let's say, some intermediate risk zone like it recovered in 2022 where the price went to between 0.3 and 0.4 risk, if something were to happen similar to were to happen in early part of 2026, price of ETH could go as high as about $4,500. That would still be a lower high because for the market cycle ETH top was at around $4,900. So that's what this indicator or this model is suggesting. Again, not financial advice. Similarly for Bitcoin, if there were rally back to between 0.3 and 0.4 risk, BTC could be somewhere could go as high as 115k to 117k right now. Again, this is as of today. These models are dynamic, so let's say in early January 2025, 2026 or February, we see the corresponding price at 0.3 risk level at around 110k. That would not be too surprising because this model reacts to the dynamic nature of the price action. So as of today, the 0.3 risk is at around 117k. In, let's say, if the price action stays down for a while, like it is right now at around 88k for Bitcoin, then the 0.3 risk could correspond to at around 110 to $112,000. With that, I would like to conclude by saying again, the drop for Bitcoin and ETH today and over the couple of weeks has cooled off the risk levels for BTC and ETH accumulation in the short term. But again, as the bearish events were to blow for the most of the 2026, this could, in historically speaking, this could be somewhere price action could be somewhere where we were in early part of 2022, and again away from the major bottoms that are usually set in summer of the bear market year or late in the later half of bear market year. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.